What's going on, everybody? It's David, also known as the Haitian Sniper at Elevated FX. And I'm doing this video because some people have seen my posts on this system that I built, and they wanted to know, like, how does it work? What is Matic? How does it work? What does it do? And all the things. And so that is the purpose of this video. So I'll get into it. So Matic actually in Hebrew means gift of the Lord. And I think that's very cool because this whole thing that I built is very, very complex. And I didn't do it because I'm just, some genius. But it was just things over the years that I've gathered from the market, and the Lord was able to bring it all out into this. And so it truly is a gift from the man above. And I'm very, very grateful. I love the results that I'm getting from it so far, and I'm excited to share it with everybody. That's kind of just where we're at with it right now, getting ready to do a full-scale launch with the company. But in English, MATIC it's an acronym. It stands for Market Analysis Tool for Institutional Confluence. All right, again, that's MATIC. It's Market Analysis Tool for Institutional Confluence. And so essentially, guys, what this does is it's an indicator, an overlay that goes on TradingView, right? So, and essentially, it's got all these different settings and stuff like that. And what it does is it's going to scan the market and look at institutional key levels. That's what these lines are. So this is US dollar, Swiss franc, so USD, CHF. And what it does is going to look at these lines, right? These are institutional key levels because institutions trade on the higher time frame, okay? They're not looking at the 1 minute chart, the 5 minute chart, the 1 second chart, the 4 hour chart. They are on the daily, weekly, mainly the weekly and the monthly, okay? That's where they are trading. And so we, as retail traders, we don't move the market. We don't, okay? The institutions move the market. Those are going to be like JP Morgan. They're going to be the central banks, the Bank of England. Those are the players that move the market. And how they do that, they move the market at institutional key levels, right? And the goal, so basically trading is a zero-sum game. If you didn't know that, now you do. What do I mean by that? In order for the institutions to enter a sell position, because they're always hedging, so they're always in buy and sells, they have to get somebody to buy from them at the top. So somebody's buying a premium, right? And then simultaneously, the institutions are going to sell at a premium. We don't buy stuff that's expensive. We sell it, right? And the inverse for if they want to be in a buy position, right? They're going to be in a sell position, and price is going to reach a discount, right? It's already discounted, so we want to be buyers. But being that it's a zero-sum game, somebody's going to continue to sell at the discount, and the institutions are going to buy at a discount, right? And that is how liquidity works. It's a swapping of orders. They're going to swap with a sucker who's going to be a buyer at the top, and they're going to be swapping positions with the seller at the bottom. And then you're going to see price move in the opposite direction, right? So that is what this does, is it's looking at these key levels, and it's looking at these liquidity rates, right? What I mean by that is you guys see this candle right here, and you see how price, what I told you, price was in a sell position, right? And what did they do? They ran the low right here with this candle. They ran the low, and they were swapping orders. So they literally were in sells from all the way up here. They made their money, and then at the bottom, what they ended up doing was getting out of those sells by selling to somebody else that thought this was going to be a momentum, even though price had been dropping for like 7 days, right? And then when they snatch back up, that is when the rally happens. Remember, I told you they're going to sell to a sucker at the bottom to then rally up, to buy and rally up. And then a sucker's going to buy from them at the top so then they can sink price and get in their shorts, right? That is how it works. So this finds those levels where this is happening, right? So so basically now, once if it finds out what the institutions are doing via these raids, it's going to set a bias, right? And the bias is going to be either sell or buy, and some days it might be neutral if the market is messy, right? So this is what it's doing. It's setting the bias. This is my heads up display. It's going to set the bias. And essentially this is two indicators in one, right? So this is the heads up display, which is going to determine the bias. It's going to tell me why the market has the bias at the end of every single day. And it's also going to tell me how the daily close. So yesterday, at the close of this candle, the bias was sell. The reason was SMT, right? If you follow ICT, you know what SMT is. Smart money tool, smart money technique. It's a reversal without a raid. And then it told me how the daily candle closed. So the candle yesterday closed lower, low, lower, close. So now if I'm a trader, I say, oh, wow, there was a rally here above this liquidity level, right? Price rallied. And then the market is saying that it's in a sell profile. And we have a lower, low, lower close. So the Confluence, again, remember, it's a market analysis tool for institutional confluence. So my institutional confluence now is going to be bearish because the market bias says it's a sell. We're in sells now. And as you can see today, the price continued short. Okay? The price continued down. So that is what the bias, smart bias filter does. And then simultaneously, we also have and when I flip to a smaller time frame, it's going to be the exact same thing, right? It'll flip back up. There it goes. Sell. It takes a second for it to sync up. So now this was yesterday's high, yesterday's low, and you can see right here, price ran up, boom, they dropped it. So our sell intent was correct. It was able to determine that the bias indeed was sell, and the price continued lower. Now, how this works is remember I told you it was two indicators in one. This is part one. The lower time frame, which you can't really see the second part of it, but it actually looks for entries in only the direction of the bias. So if the bias, since the bias was sell today, if all my conditions are met in the market, which I have a lot of conditions that need to be met for the H1 alerts to fire for my entries, like time and price, it has to be during. So this is US dollar, Swiss franc. So this is gonna be a London and New York. So this has to be trading in London and New York session. So the time has to be correct. It has to be. I'm not gonna give you everything, but there's a lot of filters that I put in here that keep me in alignment with the institutional price movements, right? But one of them is time and price. The time and the price matter. So basically what I'm saying, this is not going to be sending me an alert at 2:30 p.m. New York Standard Time. It's not going to do that because that's outside of my ICT kill zones, as he calls it. They're outside of my kill zones where there's the most volatility and the most liquidity in the market. So I'm not interested in those trades. But this right here was at 2 a.m. pre-London. Pre-London starts at 2. So I actually start taking trades from 2 a.m. for like the GBP pairs. But USD Swiss franc is actually, it uses the London session as well. That's where it's most volatile. And so 2 a.m. to 4 a.m. is my London window. And then New York will be from 7 to 11. It's done trading after that, right? And for my Aussie pairs, I'll start trading at 7 p.m. until like midnight, right? but it does not operate. The H1 engine does not operate outside of that. The things that send you the alerts. And how these alerts work is once I load on my chart, I just set them once. I set it and forget it. These are all, see, I got 15 pairs on this. So these are all pairs on here that are attached to alerts, right? So this is USD CHF. So I have USD CHF. Yeah, so there's my USD CHF. I got a buy condition and a sell condition. So if I would have gotten an alert, this is because the sell condition triggered, and then it's sent, and it allows me to get in a sell. So once that happens, it sends me the alert, right? So I didn't get a USD CHF alert last night, but I did get oh, this is amazing. I got a Euro USD buy alert yesterday. So it's got the symbol, Euro USD. This is just for my trade manager, the 0.03. That's how it just reads it, and then it decides the lot size, and it tells you the stop loss. So that is, so if you guys wanted to get this tool, that's how it would work. Is you would essentially, you're gonna log into a web app that we have through Elevated FX, and then these alerts are gonna come in through that web app, and you just follow what it says. If it says buy your USD, you're gonna buy. You're not gonna sell it. You're gonna buy, and you're gonna put your stop loss below the low. I'm sorry. If it says sell, yeah, no, this was a buy. So buy your USD, stop loss below the low, market execution. That's it, right? Sell GBP USD, you would sell it, stop loss above the high, and market execution. That's literally it. But this Euro USD trade was amazing yesterday. Let me pull it up. So I got that alert at Euro USD. I got that alert at 9 a.m. yesterday. So I got it right. That's 8 a.m. right there. Right, I got it right here at 9 a.m. I took the buy, and then as you can see, price just freaking rallied like crazy. So that's literally all I had to do, right? And that's Matic, guys. It's, I mean, look at dollar index. Let's just see. So we always look on the daily. That's kind of the time frame I operate off of. But you can see on the daily, buy to sell, and it tells you the why, and then lower, low, lower, close. So yesterday, price was close. The price was a sell. Price was sell, and the reason was a fake out. Candle close, low, low, lower, close. All right, and today we tanked. Euro USD, we just did that example, but I got that alert yesterday. Bias is buy, reason previous daily low raid, right? And then high close. As you can see, it closed yesterday. Higher close, and then price rallied. Let's look at GBP USD. GBP USD. Bias was buy at the close of the candle yesterday, and today we rallied. So we were looking for longs on the H1. Go long here. After that low rate, go long that rate. But I mean, my conditions weren't met, but looking at it, I'd be like, oh, I could go long there. USD CAD, another one, right? So this was yesterday's candle after FOMC, right? Bias is sell, okay? On the new open of today's candle, price rallied and dropped, okay? And yeah, guys, that is what Matic is. Remember, it's a market analysis tool for institutional confluence. We are looking for trades that in the direction of the institutional investors. So we're looking for institutional sponsorship is what you call that. And so, yeah, it's bias is set. And then the lower time frame, the H1, will only send H1 alerts on the actual